evening, ladies and gentlemen. The madness of the beef between China and US is just spreading like wildfire. Why? Well, let's just look at things in perspective. In tonight's video, we're going to be diving into what the story is and Binance's hidden links to China. We're going to dive into this story about TikTok and Congress and how they're looking at getting rid of TikTok for US users. Then we see an announcement made by Xi Jinping today about they are preparing for war. On top of that, we've also got the Secretary of Defense, Mr. Lloyd J. Austin, talking about the increase in the US defense budget. Okay, now things are starting to get a little bit interesting. It seems like it's just the US against China. And then once we're done with that, we're going to dive into some price action with Bitcoin. Let's have a conversation. So we get the party started off with this story about Binance and its hidden extensive links to China for several years. Now, as we scroll down, the article goes on to explain that Binance had actually left or not had any association with China in the late 2017, but now it looks like that's not the case. So how does that affect us? Well, look, there's lots of scrutiny on crypto and everything's doing fine. But in relation to BNB token itself, given that the SEC has sued Binance, we're now starting to see Binance Coin starting to work its way back up towards the red vector candle recovery zone. I'm not really seeing that much success given that Bitcoin has had a nice move to the upside today and Binance itself hasn't really done much. So it's cautious. You've got to be mindful that when a coin that you are holding is hitting the news and it doesn't look good, just be cautious with your asset, okay? Just, if you hold a lot of Binance and you're seeing all these problems with Binance hitting the news, just be very cautious. They say buy the rumor, sell the news kind of thing. This is where we are. Now, looking at Binance, you can see we do have other green vector candles down here that they could actually come and take. But so far, Binance is holding out really well, given the scrutiny from the SEC. So that's the first thing with Binance and US and China. Now we have this TikTok story, and it looks like they are very in favor of passing this bill. The bill is designed to cut users from using TikTok in the US, but not immediately. What they're actually planning on doing is they're going to prevent users from being able to download it on the app stores, but more so not allow users to update the existing app. So as time progresses with TikTok, the US users aren't going to be able to update the app and they're going to miss out on any changes and it won't be as functional as it was in the past. But this is, look, the second attempt with the US and China story. So you can see from social media to crypto, the US and China are having a go at each other. So we have the opening testimony by good old Secretary of Defense, Mr. Lloyd J. Austin, discussing the US's defense budget. Now, the budget itself is the biggest in the world. Most of the money that the US spends is on defense. Look at this. So back in 2021, the last reading there or thereabouts was at around $780 billion. Now, this big red line right here is China's defense budget. At face value, you look at it and think, they're doing pretty well and they're spending quite a bit of money. But the left axis is for China. The right axis is for the US. So China's only really spending roughly around $260 billion on their defense. Why on earth is the US increasing the spending? Well, in this actual article itself, it goes on to highlight what they're planning on doing. Now, the defense itself is at $842 billion. So there's been an increase of 3.2% in the fiscal year of 2023. Okay? What are they increasing it for? Well, check this out. Further down, it goes into the article and shows you what they plan on spending the money on. So $61 billion is going to be going into sustained air dominance. All right? So we're talking about planes now. Most of the capital is being spent on planes. Cool. Well, what planes? B-21 strategic bombers, yeah? All right then, check this bad boy out. This thing right here costs $700 million to build, each. Now, this company, Northrop Grumman's, can't even say it, is going to be building these bad boys. Now, this is their share price. Not bad. From a high of $555 a share, it's currently trading at $459. They've actually now got this contract to build these planes. How many is the US going to want? 5, 6, 7, 8, 10? Who knows? But this company's winning now. And this is what we can do. When we read about these sort of articles as investors, because back in the day, Mr. Dow Jones, how do you think he was able to try and get his claim to fame in relation to the stock market? He was heavily invested in the industrial era. And the only way that he could profit from it is if he focused on what was going on industrially in the US. So he would go to power plants or anywhere that they were creating steel. And he would just pay attention to the chimneys. Every week or every couple of weeks, he would go and see if the chimneys were smoking. The longer they were smoking for, the more production was being done. That means they are generating income because people are paying for the steel. So that's where he would invest. You now got Ray Dalio, who is looking at investing in oil. And I saw this, and the gentleman was discussing that Ray Dalio isn't the guy that's going to pull up charts. No, he's going to get satellite images of oil tankers and try and work out the demand based on how full these oil tankers are. See, that's when you get access to that intelligence, you're playing a different ball game. You know, our intelligence is limited to TradingView. Happy days. Let's go make a ton. That's what I'm trying to say. The approach as an investor when you are looking to take advantage of these sort of situations, keeping an eye on the US defense contracts is going to help you find little gems like Northrop Grumman. This thing has been non-stop going up. Can't even say its name. Monthly. 2007, 2008 subprime mortgage crisis. Everything came down. But since then, it hasn't stopped going up, continuously making highs and only 17% away from its ultimate high over here at $555. Not bad. It's outperformed the S&P in principle. But it's a defense stock. And these guys will always get liquidity. Aerospace and defense will always have capital. It will never go down. There will always be in business, these companies, which in principle will give you a good dividend return. Next year, 2024, they're projecting an 11% increase to $24.57. Happy days. So going back into this chart right here, we know that the US's defense budget is around $842 billion. Now let's go to China's. Well, back in March, China did declare that they're increasing it by 7.2% to take their defense budget to around $273 billion. But Xi Jinping announced today that the world should take him seriously because this guy, it says, he's preparing for war. What's going on? The question stands. Is it if you pay more money, you've got access to more? Do you think China isn't in a position to pay more? It all depends, doesn't it? You naturally think that the US defense budget being nearly $850 billion, as a world leader, you'll be like, oh man, they've got obviously more than us. This guy is standing strong, probably trying to make a point that you don't need to spend that much on it. And I'm not even going to get into the politics side of it. Now, back to what I was saying about opportunities in the stock market. So an article that came out on the Wall Street Journal suggesting that work from home era is ending for millions of people. Now, if you guys remember, Zoom benefited from people working from home. And we go into Zoom's share price. Check this out. Zoom saw some crazy gains during the COVID situation, went and traded all the way up to around $600 a share at the start of around the pandemic. And you can see at 2019, towards the end of it, they started off at around, the pricing was roughly around about $50, $60. And it shot all the way up to around $600. And now we are currently sat trading at $70, back to their IPO zone, their initial public offering. This is where you can find opportunities. Work from home era ends for millions of Americans, all right? So you then think to yourself, okay, what company provides people the ability to work from home? Now, internet usage providers, service providers, they will always be in business because we always need internet. The only thing that's going to encourage businesses in the internet sector to actually do well is if they just provide faster internet for a lower cost, all right? But situations like this, where you've got work from home era ending, we go to companies like Zoom and see where we can take advantage of that situation. Now, Zoom is trading lower. Now, would it mean that you go and blindly buy Zoom? Not necessarily. But you can see that it had its heyday going into $600 a share. Now that people are going to be working less from home, Zoom, in essence, is going to have to start working ways on actually improving its product and try and generate a new service. So although it's gone down to $70, you want to be paying attention to what Zoom has got in the pipeline, which in essence is going to help them recover and come back up to their fair value zone. Now, we know we're talking about this AI story, and NVIDIA is smashing it right now. They had an eye-popping $300 billion in market value, all because of AI. Now, is AI the future? Well, now here's an opportunity that we can exploit. Going over into the chart itself, you can see NVIDIA, $666 billion a market cap, and this bad boy is getting ready to rip it apart. Just have a look at their earnings per share, up nearly 41% for 2025 and 4% estimated in 2024, okay? Remember when we spoke about Northrop Grumman's earnings per share as a defense stock, now NVIDIA, Electro Semiconductor, and of course the US is trying to prevent China from benefiting from that $52 billion funding for semiconductors. NVIDIA is just going to win either way. But more importantly, looking at the chart, you can see even through the current crisis that we have got with inflation, high, great jobs market, banks collapsing, I can't even say it. NVIDIA is doing very, very well. So that's one for you to keep an eye out. $270, in my opinion, that's cheap for one of the main players in the AI markets. So now we are in the charts, ladies and gentlemen. If you have made it this far, mad love and respect. Make sure you hit the like button to work that algorithm. But more importantly, subscribe so you get notified about tomorrow's New York live stream. So you can take advantage of certain plays that can happen based on the price action during the open of New York. Now, earlier on today, we were talking about this red vector candle region right here that we were anticipating Bitcoin to come back into. Happy days. They come back into that zone, retraced away from it, and then continue to finalize the vector candle region right here in the chart. As you can see, they've come back and finalized the majority of this green vector candle zone. This is part and parcel, one of the 5-minute strategies that we talk about in the Patreon of the channel. This is the structure of it. We've had 3 hits to the highs. One's getting lower than the other, and you see how they rolled price over, but now we have got movement back up. Now we need to navigate where they could be moving towards. Now, High Block is suggesting that there is around $3.5 billion worth of short liquidations at the 28,800 zone. When price keeps on rising higher and higher, it's because people are trying to effectively find the top, okay? So price will keep moving up. Market maker knows that he can grab people's liquidation points who keep on coming into the charts and believing that this is the point where Bitcoin should turn. But as long as Bitcoin holds critical areas in the chart, then the narrative is it's going to keep on going higher and higher and higher, okay? Going into the higher timeframes, again, that 800 EMA is the point of importance. Bitcoin needs to break beyond this 28,000 zone right here, 28,879. It has to break it with conviction so that we are in more confidence that it's going to try and seek higher ground once it retests that zone and continues back up, okay? Word on the street is suggesting that unless Bitcoin breaks above 30K, then they don't believe that this move is sustained to the upside. Now, we do have the news announcements coming out tomorrow, which is the unemployment claims, which could install in traders' eyes that the Federal Reserve is going to get even more aggressive with interest rates if the labor market is still hot. Now, if the actual data comes out tomorrow and it's showing an increase in unemployment claims, that's good news, which leads me over to the dominance of the dollar. Now, you can see, before I go there, the Bitcoin itself is holding at the 5 and 13 EMA, would be suggesting a continuation up, but they've spent too much time in this zone and not followed through with it. We look at the volume and you can see it's descending down, not really showing a conviction, but in Asian session tonight, I would be expecting Bitcoin to try and go for the liquidation zones at around the 28,750 region and try and hit the 29K zone. That'll be a very important area for Bitcoin. What it does at that point is going to be the deciding factor as to whether or not Bitcoin can continue higher into the recovery of the red vector candle region on the 8-hour time frame, which we have got inside of this zone right here at around 29,347. And of course, in that last zone right there, Bitcoin started to drop from that area. So we're going to now work out if the interest is to send price here to drop it from there, or are they going to bring it here, hold, and then continue back up to eat the liquidity currently at the 38 zone. Wow, Bitcoin back at 38K, happy days. Now, going into other assets to help us understand this move, okay? Dominance of the dollar, still forming this structure right here. It's holding out, all right? When dollar is holding, it's telling you that they are transacting. They are bagging up dollars right now, because they're not putting it into the yen because the yen is dropping. And when the yen drops, the dollar goes up because the yen is not acting as a safe haven anymore. That's the same with gold. We go into gold. You can see gold is still at the highs, but it's starting to pull back. And a test of the 50 EMA on the 8-hour time frame might take a little while, but to get down to 1928 would be a valid assumption that the traders that went long on gold, or the traders that were selling gold positions as it's been moving up, are effectively going to be looking at picking up gold cheaper as it comes back down, which would in principle initiate the cyclical move lower to eat the vector candle recovery zone. Again, the news that comes out tomorrow could suggest something like that, so just be mindful of it. Now, going into the euro itself, okay, has seen a little bit of a wild day today. And of course, as long as euro keeps trending lower, that means the dollar dominance is going to keep on going higher, because the euro makes up 56% of the dollar dominance, or the index itself, okay? Now, euro is showing a very interesting structure right here, a bigger time frame play, which is showing a potential M formation. Now, all we need euro to do is to break back down. But if it holds this little area right here, then we're going to be coming back up into these vector candle regions when euro started its move. In essence, I'm looking for this bad boy right here to come into play. And if it does come into play, we should see it form the structure right here. The only way that it won't is if it holds the crossover of the 200 and the 800 EMA and the 50 EMA, then we will see higher price action from the euro. Going into the pound itself, you can see it's also coming up to a very strong resistance point. So just be very cautious when you are swing trading these assets. They are prone to news. And when I say that, it means that an article can come out and rock the markets, okay? NASDAQ and S&P have seen some wonderful gains today. Again, volume is dropping as it's rising. We need to see clean breaks. We mentioned that they were going to come back into these vector wicks and the vector candle recovery. They've done just that. Happy days. Going to smaller time frames, and there is our zone that we expect them to come into. Now they are at that point where they sell from. So you've got to try and put it in your mind that, is this the area where the market is going to roll from? Okay, because that's exactly what they've been doing right here. A clean break of the 13,000 would solidify the idea that the market just doesn't care, and it's going to keep going up and up and up. The higher the market goes, okay, the higher they can retrace and hold and continue with the move higher. So this is a very important zone for the NASDAQ right now. Moving on from that, ladies and gentlemen, I'm just trying to put into perspective the idea that this beef between China and the US, it's not to alarm you. It's just to let you be aware of how you can take advantage of these situations. War does encourage liquidity. It encourages movement. It encourages traders and encourages investors to start exchanging goods because they're preparing for something. You know, you prepare yourself for a party, you're going out and you're buying the drinks, you're buying the food. Who's winning? The supermarket or wherever you buy your stuff from. Remember, ladies and gentlemen, we'll be going live tomorrow at 2 p.m. GMT, which is 9 a.m. Eastern Standard Time. Mad love and respect for passing through to tonight's video. Hit the subscribe button and I'll be checking in with you all tomorrow. Peace.